morning and welcome to Business Morning. I'm Ladi Williams. Today we're tracking how investors can navigate volatility right now and the best way to profit, also with the latest happenings in the global oil market. A lot to unpack today and definitely to give us direction into these markets. But we see for the local bourse, investors on Nigeria's Exchange Limited recorded fresh losses in the midweek trading session there. Profit taking in major stocks pushed the market into negative territory. Shares of Presco PLC, UACN PLC led the decline, dragging the market lower and wiping out about 107 billion naira of the total market value. But it's a mild index loss there, just about 9 basis points, holding on to the 195,000 level. Equity cap 125.75 trillion naira. Let's look at the trading activity there, showing caution right there in market. We see volume 671.27 million. That was traded yesterday, valued at 26.13 billion naira. Deals 58,782, lower than the previous trading session. Let's look at the top trades. Financial services topping there. Wema Bank 106.36 million, Access Core 59 million, M-Benefit 38.39 million. It seems we always have to see an insurance stock there when it comes to the top trades. Then we see for the top gainers, NGX Group 186 naira 45, a full 10% gain. I'm guessing for the NGX Group stock there, definitely, if the exchange is doing well, has good volume and value, and the index keeps rising, I guess the NGX stock should rise. I think that's my thinking. That's how it should work. Then Presco, 2,003 naira, 10% drop there. UACN 9.97%. This led the losers for the trade yesterday. So that's how the market ended. We'll see if maybe investors come with some cherry picking, but this week looking quite weak compared to the previous week. All right, let's look at the global oil market now. It's once again in focus as the International Energy Agency moves to release 400,000 barrels of oil per day from strategic reserves in a bid to ease supply pressures and calm the volatile energy markets. Well, let's go back a bit. Let's see the times that the IEA had to try and put in some barrels into the market there with strategic releases. We see for the 1991, the first Gulf War, that was the first time they released 75 million barrels of oil into the market. Obviously, there were disruptions to supply, and anytime there's disruptions to supply, they step in to pump in some barrels into the market. Then 2005, Hurricane Katrina there impacted supply. They released 60 million barrels into the market to ease things there. In 2011, the Libya civil war, they released another 60 million barrels of oil. 2022, Ukraine invasion, they released a massive 182.7 million barrels of oil, also to try and calm things down, because once there's a supply disruption in the market, you see oil prices rallying, energy prices rallying all over the world. Then right now, 2026, with the Iran war, this is a massive 400 million barrels of oil released into the market. But now the big question is this able to calm nerves, in the markets at this point? Because it's massive, compared to, the previous releases, when oil prices were, ravaging. Definitely is a big one, 400 million barrels. But is it going to close the gap, that we see in the market right now? That's the big question. Also, how many barrels would be released daily? That's another question. If they're releasing maybe up to 4 million barrels a day or 2 million barrels a day, definitely that should help, close the gap. But at 2 million, analysts say that would not help, to close that gap there with the Strait of Hormuz there being blocked. So that's it. That's the latest one, 400 million barrels. Well, let's see how impacted price, because with this kind of release, you should see oil prices actually drop at this point. Investors should be like, okay, there's not going to be issues, but no. Brent crude up again. It did cross back above $100 per barrel, 5.72%. WTI back again, $91.66 a barrel, big 5% rise. So I'm sure investors are wondering at this point, some of the analysts, this shouldn't be happening, because when we got that announcement, oil prices did fall a lot. We did see up to double-digit losses on that announcement. But now that we have confirmation with 400 million barrels of oil coming to the market and we're seeing oil prices rise again, definitely there's some gap there, and we will analyze all of that going forward. All right, let's get to other stories now. Definitely, we've seen the oil market. Let's see what's happening on the fiscal side of things. For Nigeria, we see Nigeria's external debt obligations are taking the largest share of the country's foreign payments. We've been seeing a lot of data coming out recently about what's playing out with debt obligations. Data from Central Bank of Nigeria shows the country spent $5.21 billion servicing external debt in 2025, an increase of nearly 12% from 2024. The figure now accounts for more than 72% of Nigeria's total international payments. And, this is coming from the central bank. Even as overall external payments declined slightly during the period, the development highlights the growing pressure of debt servicing, what that's placing on revenue at this point. The main debt itself is one thing, but when debt servicing is taking a huge chunk of revenue without even taking care of the debt itself, then there's a problem. So that's what the new data is showing us there. $5.2 billion spent on servicing external debt. All right, let's look at some nominations now. President Bola Tinubu has nominated former Director General of the Securities and Exchange Commission of Nigeria, Sir Lamido Yuguda, as Deputy Governor of the Central Bank of Nigeria. The nomination, announced by the President's Special Advisor on Information and Strategy, Mr. Bayo Onanuga, is subject to confirmation by the Senate in line with the CBN Act. The President, he says, the appointment is aimed at strengthening leadership at the Apex Bank and advancing efforts to support Nigeria's economic stability and growth. And now to trade. You see, the Minister of Commerce, Trade and Investment, Jumoke Oduwole, has pledged renewed government support for business owners and investors at the Trade Fair complex. This follows growing complaints of systemic neglects and a harsh economic climate that traders say threaten their substantial investments. Speaking for the group, we also see Chief Oke Zebe, BOT chairman of the Balogun business area, called for urgent sector formalization, a harmonized tax system, and critical infrastructure upgrades within the complex. Take a listen.
We've toured all over the world to see how businesses are conducted abroad, and we are replicating that in Nigeria. But we lack support from our host government. We are not appreciated enough to do more. We are not encouraged enough to invest more in our dear country, Nigeria. We suffer a lot in the hands of Mr. Local Government Chairman, in the hands of authorities around, including local governments. From the port to this place, we have 3-4 checkpoints. From the border, we have 22, all targeted at our goods and services we render here, which in turn, honorable minister, you share part of the cost, because we transfer that to the consumers.
So that informality that is begging for formality, we will work with you on that. Another thing he mentioned is that many of you are industrialists, and we know that. Nigerian business investors, some of you own factories elsewhere. You cannot be enriching other countries, I wouldn't mention names, and giving jobs to others when you can do it here. I want to assure you that I've also had conversations, and it wasn't me. The governor of Lagos State called me to pay attention to what is happening here. The governor of Imo State called me to pay attention to what is happening here. I had already been talking with my MD, but just to say that I'm also not alone. At the subnational level, the governors are also interested in what is happening here.
She has said things for herself, and she promised to come back. We even promised her to come, so that we can show her our efforts in building the Nigerian economy here. We already asked her to greet our president, who is mindful of his children, that after hearing our report in this place, there are many things that will come to our aid here. So I really thank God for the day.
Yeah, definitely attention going to trade. Right then, we did, get some latest data from the MBS, showing, where Nigerians are, importing stuff from and what we are importing a lot of. And we did see textile imports taking a huge chunk of our imports. All right, to other matters now. The second day of the Inclusive Fintech Forum in Kigali, Rwanda. The focus included leadership for Africa's digital, financial, and economic transformation, captured in the address by the Prime Minister, Honorable Justin Nsegiwa, and another line of dialogue being, capital at the frontier, financing Africa's digital and economic transformation. They shared in the special remarks by the Executive Vice President of the Afrexim Bank, Mr. Haytham El-Mayagi. They both agree that innovations in the global financial ecosystem present huge opportunities for Africa. However, maximizing the opportunities, that requires some work.
We stand at the frontier of many economic opportunities. Global supply chains are shifting, opening the door for new manufacturing and industrial partnerships. At the same time, rapidly expanding digital technologies are allowing African entrepreneurs to leapfrog legacy infrastructure, an opportunity many are already seizing, particularly in the fintech sector, now the leading segment of Africa's startup ecosystem.
The digital ecosystems can bring 80% of our population into formal financial system. But let us be clear, digital transformation cannot thrive in thin air. It requires hard foundation, broadband, data centers, reliable energy. It requires soft foundation, harmonized policies, and the implementation of the AFCFTA trade protocol, the digital trade protocol. And without these, our innovation will remain trapped within borders.
All right, let's look at some business support initiatives right now. Entrepreneurship and grassroots economic empowerment. That took center stage for Delta State as 80 small business owners received major financial boosts at the second edition of the Kessin Pondi Business Grant. The privately funded initiative by engineer Kessin Pondi, who is also the managing director of Tantita Security Services, which has gained prominence in the Niger Delta, disbursed a total of 800 million naira to 80 entrepreneurs drawn from different sectors of the economy and different states in Nigeria. Take a listen.
Business leaders, community stakeholders and beneficiaries dressed in blue and white gathered to witness the empowerment of 50 business owners with 500 million naira under the Pondi Business Grant. Chairman of the Grant Committee, Mr. Victor Iserike, highlights the vision behind the initiative and its goal of supporting emerging entrepreneurs.
Today's beneficiaries, for you, this grant is not the finish line, but it is only the starting point. We have called you to contribute to nation building. We have called you to contribute to creating job opportunity for others.
Each beneficiaries will receive 10 million naira and participate in a business training session with practical strategies for business sustainability.
Doing your own parts, first they tell you this is not what we agreed to do. So you have an invoice that describes the service or the product that you're going to deliver to the person.
The program also features a panel discussion where 4 alumni of the grant scheme share their experiences.
We also did painting and artwork to solve the ambience of the school became beautiful.
Delivering the keynote address, the sponsor of the scheme, Managing Director of Tantita Security Services, Mr. Kestin Pondi, reiterates the importance of supporting small businesses as drivers of economic development and community prosperity.
Despite these challenges, Nigerian entrepreneurs remain remarkably resilient and innovative. It is this spirit that inspired the creation of the Kestin Pondi Business Grant, an initiative designed to support hard-working entrepreneurs, strengthen small businesses, and contribute to sustainable economic growth within our communities.
He then makes the big announcement, causing emotions of joy and applause from the lucky budding entrepreneurs.
Each of the 50 beneficiaries of the second edition of the Kestin Pondi Business Grants will receive the sum of 10 million.
Moved to support the cause, 3 other dignitaries donate 100 million naira each as grants to 30 more entrepreneurs, bringing the total to 800 million naira for 80 beneficiaries. One after the other, beneficiaries mount the podium to receive their checks.
I want to say thank you to Nigerians that are doubting that it's given to his family members. I am someone that has never heard of him and I'm a beneficiary.
Dignitaries present commend the initiative as the much-needed support for people of the Niger Delta region.
Government for the past years have been making effort to empower our youth with a view to strengthening job creation and wealth creation. What he has done now is keying into that effort of government because, like he acknowledged, government cannot do it alone.
The high point of the event is celebratory as guests rise to honor Mr. Kestin Pondi with a surprise birthday cake.
And now to our first conversation. In a market shaped by high interest rates, you see currency moves and shifting global capital flows, investors are increasingly asking one key question. Where is the smart money going in Nigeria? From equities on the Nigerian Exchange Limited to fixed income instruments and alternative assets, institutional investors are repositioning portfolios in search of yield, stability, and long-term value. But in an environment of macro uncertainty, understanding these capital flows will become critical for both local and foreign investors looking to navigate Nigeria's evolving financial landscape. Today, we take a closer look at where sophisticated investors are placing their bets and what it signals for the future of Nigerian markets. Joining me for this conversation, we have Mr. Shedrack Nokoma as a Group CFO, United Capital Group, joining me right here in the studios. Great to have you, sir. Good morning.
Good morning. Great to be here today.
Fantastic. And, definitely, I like when we try to, unpack most of these markets and, different investment vehicles at this point, because I guess, as an individual, you keep hearing about investing, saving, and somehow that is supposed to take you from where you are to where you want to be with, financial independence and all of that. Looking at Nigeria's macro snapshot, we see a monetary policy rate of 26.5% after the recent cut there by the MPC. Inflation rate, the last number, 15.10%. We're expecting, I think we should get the next, the one for February soon. Then exchange rate, 1,376 naira to the dollar. 91-day Nigerian Treasury bill, about 15.95%. And, definitely we see a range there, if you're playing in the fixed income market. And nowadays, we have a lot of apps at this point. And I know you guys are also pushing for, digital access, into investing. If we look at the U.S. economy, over 62% of Americans are invested, in the capital market. So they don't play, with investments in that climate. Do you think Nigerians are getting more investment savvy?
Okay, thank you very much for the question, and thank you for having me on the show. My response to that question will be yes and no. So yes, because in 2025, we saw an uptake, especially in the equities market. Local investors, upped their game, investing almost 1 trillion naira in the equities market. And that signifies about 56%, growth in the equities market. And that was just between January to June. And the numbers we are seeing shows clearly that, Nigerians are beginning to play, in the investment space. But I said no, because if you look at the market, so the statistics we have shows that over 60 million Nigerians are in the betting industry.
60 million?
60 million.
Betting
industry.
Wow.
And what that signifies is that there is a strong appetite for risk. But that appetite is diversified elsewhere and not in the investment space. So what we would like to see is a situation where, we have more people coming into the equities market, coming into the fixed income market, where, your risk is somewhat, guaranteed in terms of the kind of return and the security you have on your fund compared to, the gambling, space. So clearly it shows that, one, yes, we're seeing a movement. People are playing in that market. And thanks to shows like this, the business morning shows. And at United Capital, we've also taken the bull by the horn. We have quite a lot of financial literacy programs, that we push out there into the market just to get people more educated, to understand what the market, the opportunities within the market. And
all right, so
you talked about technology.
Yeah, sorry to come in there, but we have some gamblers out there, and in their minds, they feel like if I take a gamble on maybe a sports bet or something, I could gain a lot. I could gain 10 times my money, 100 times, depending on how big that odd is. And they'll also say, if I'm betting on a company now, buying their stock, there's also that risk that that company could maybe just go under. Maybe they didn't manage the business well, and that's another risk. And they end up losing their money, their investment. So some would say, okay, I guess gambling risk and investment risk, maybe not too different.
Yeah, it's quite different. So when you're investing, you're taking a calculated risk, right? You're investing in sound fundamentals. And that is the mistake some people make, wanting to get rich quick and all of that. But just think about it. We've had companies in the Nigerian market who have lived almost a century, right? So investing in sound, fundamentally strong companies, you can't get it wrong. But you could lose your money when you begin to place bet on
maybe Man U doesn't win.
And, just like yesterday, Man City crashed.
Man City, I saw a lot of people lost.
A lot of people lost money.
Tickets got cut.
So if you're going with that get-rich-quick mindset, you could get poor and bankrupt quickly as well if you go into that space. So what we're advocating is, steady growth, calculated risk, investing in strong fundamentals. And we believe that if you go that direction, you cannot get it wrong.
Right. All right. Talk to me about technology, things, how that's helping.
So technology has helped a great deal. Now we have a lot of platform at United Capital. We have Invest Now, where you can easily just sign on and you start investing immediately. Unlike what we used to have years back, where people who want to invest would want to walk into a company to be able to invest. Now you don't have to walk to any of our offices. All you just need to do is download the app and then you start investing and you monitor your progress. You see how well you're doing. You see all the options and opportunities available to you in the market.
You're right. Things
have
really changed, because I remember personally when I was in uni, for some reason I felt like I had to invest. So I think that time at Intercontinental, I think they were selling shares at that point. I did have to, I remember walking to a bank, pick up a form, I filled it. Then I also had to walk into an investment company that time too, to say, okay, I want to, invest. And it was a long process. I had to be there physically, enter this office and that, but things have really changed.
Yes, really, really changed. And I think the fintech industry is beginning to change the game. And that is why most investment companies like ours, we're also following that trend, making sure that we have our presence in the digital market just to help, investors, get things done easily and be able to invest their money.
Right, and definitely we know some investors that still feel like this markets, equities market is really risky when they remember the meltdowns. How some of the assets they bought are not worth anything. Right now they've not been able to recover that much. And looking at the NGX, we're at all-time highs at this point, new levels. I call it price discovery for the index, levels we've not seen before. There you have it. Month-to-date return, just for the year-to-date return, we have 25.9% already in this first quarter. Month-to-date, 1.6%. Last year, over 40% gain.
51%.
About 51%. For the index. And we know some savvy investors would say, you know what, if I was not in this market earlier, I don't want to come in now. I don't want to come in at the top. But some believe this will still keep going up. But how do you navigate this?
Okay, so looking at the 2025 performance of the index, we did about 51%. We outperformed the global market. Global market did about 25%. And that signifies, and in fact, you can describe the market to be bullish and optimistic, but then cautious, right? So even at that, we still see huge, huge opportunities. You talked about the meltdown. You see, the market works late, but it would definitely correct itself at some point. Now, for those who invested then, I also invested in the market at that time. I mean, 2018, we had a meltdown. For those who stayed with the market, today they are getting the benefit. So you can imagine, take for example, 2019, when I joined United Capital, the stock was trading at just 2 naira. Today, we're above 18 naira. So you can just do the maths. That's significant growth. We believe that growth will continue. And the capital market presents opportunity for you, to prove inflation. When I say proof now, like you wear bulletproof, the market presents a proof against inflation. So if inflation goes up, you have a market that helps you to protect your money. So we believe that the trajectory is
right.
Is up.
And definitely for some that might want to invest, they have that urge, to actually coming to these markets, but there's a cost of living crisis. We've seen the currency, our local currency, devalue a lot, in my mind, I'm still at levels around, 400 naira to the dollar, 300. I miss those times. And I know a lot of people, miss those times too, but that has created a lot of poverty, especially when you see wage growth not matching the inflation rate and devaluation, even though inflation has come down, due to rebasing. So as someone that wants to invest, and maybe, my wage growth is not that great, disposable income, not that great, but I want to invest. But at the same time, I want to eat. I have to take care of expenses right now. How do you balance that?
Yeah, you're absolutely correct. But the interesting thing is this. So look at the market. After the government policy, removing fuel subsidy, and then floating the naira. That brought hardship. But in the midst of that hardship, we've seen the market, the investing market grow. We've seen the equities market grow. We just talked about it, 51% growth. Inflation was a key driver of that growth, right, in two ways. One, valuation definitely will go up. Two, people needed to protect the little they have gathered. They needed to prove it, kind of. And so the little you're able to get, you put a little stipend, in the equities market, for example.
Okay, so let's say I earn maybe 100K, I still have to pay rent, I still have to, take care of maybe school fees and, all of that, or maybe I'm on 300, 200,000.
Yeah.
How much of that do I get to invest? Knowing that fuel prices have risen again, at this point.
Yeah, so, and that is one of the reasons why we come on shows like this, to educate people. You don't eat everything you earn. So typically you plan. You set out a portion of your earnings to invest for the rainy days. So if you've not been doing that, this is the good time, those of our listeners there, to set aside part of what you're earning to invest. Otherwise, you end up eating everything and you live in penury. So you must make deliberate efforts, to set aside a part, even if it is 1,000 naira. So for example, we talk about this, people are still buying recharge cards, people are still going on their phones and doing a lot.
So many subscriptions.
Yes,
you
subscription everywhere.
So many things, yeah.
That 1,000, and that's why we have mutual funds at United Capital, where you can just set aside 1,000 naira, 5,000 naira, invest, and you watch your investment grow with time. So it's important for us to understand this, that you don't just eat everything that you earn. Set aside something.
It's quite interesting. Some will say, these are the hardest times, because maybe in our fathers' days, you see they had like 10 children, they were able to take care of all of them, own a home, and, do things. But now, these are quite interesting times. But let's look at you. You're listed on the stock market. You also released your earnings, revenue, 58.4 billion, up about 34.81% year on year. Gross profit, 34.81% higher year on year. Operating profit 43% higher. Earnings per share, that's up 16%. Total assets up 3.51% year on year. And you're in financial services. How are you able to deliver this result?
Okay, for us, 2025 was quite a tough year. I cannot talk about our numbers without, referring or looking back, and to also remember lionesses and lions that fell, as a result of the fire incident that occurred at our office. We remember them fondly. So 2025, and again, I want to also say that for our colleagues who have been resilient and they've remained strong, we acknowledge you. 2025 was tough. In fact, as a result of that incident, we lost a whole quarter. But even at that, we were able to turn out the numbers that you have just rolled out. We grew revenue by 35%, to close the year at 58.5 billion naira. It's quite significant. Profit before tax, we closed at 41.2 billion, growing at 37% year on year. Quite significant. And those numbers are great and exciting. And what this shows is that we are poised even to do better in the coming year. What drove this performance? I think we had significant growth in our fees and commission income. Again, that speaks to the fact that people are taking interest in investing, because we earn fees just by growing the number of people that come into, to invest. Saw significant growth, 59% growth in our fees and commission income, and that is the core of our business. And that shows that we are a strong business, and we are well positioned to continue to drive and sustain the kind of growth that we have recorded in 2025.
All right, definitely. I'm sure investors will be looking out for 2026 and also the forecast coming for this year. But thank you so much. It was great having your perspective, Mr. Shedrack Nokoma, as a Group CFO, United Capital Group. Thank you for coming on the show today.
Thank you for having me.
Fantastic. All right, so we see trade experts believe that increasing women's participation in agribusiness exports remains key to strengthening the agricultural value chain, boosting economic growth, and promoting inclusive development. The call was made at the World Trade Organization Women in Agribusiness Trade and Export Conference in Abuja. The chairperson of the organization in Nigeria, Professor Ngozi Egbuna, says putting women at the forefront of global export activities will help unlock new opportunities and expand Nigeria's agricultural value chain. Take a listen.
This meeting brings together women in agribusiness and exports to celebrate the role they play in domestic and global trade. According to the International Institute of Tropical Agriculture, women are critical to agricultural production, processing and marketing, contributing 60 to 80% of the agricultural labor force and food production in Nigeria. However, these trade experts are concerned that women remain underrepresented in domestic and global markets.
Our youth population is growing rapidly. At the same time, food insecurity, climate shocks, import dependence, and rural underdevelopment and underemployment persists. We cannot address these challenges with old economic and development models. We need innovation over subsistence. We need enterprise over survival. We need value addition over raw material dependence.
The experts also emphasized the need to ensure that younger women are actively included and supported along the agribusiness value chain.
And WATEX, we're not just going to stop at just the women. We're taking it down to our young women. And we're going to take it down to the teen women, so that from scratch, we're building our teen, that's our young girls. We're going to imbibe it in them.
We want to ensure that what our women are producing can be produced and packaged to meet international standards for export. We want to ensure that there is a market for their products, that there is a way we can bring in foreign exchange for a woman in a rural area.
For the first time in 2025, non-oil export grew more than oil exports. So now we are talking about growth in the non-oil sector, which agriculture is part of it. And agribusiness is number one there. Because apart from services, I don't think that we export any other thing except agribusiness commodities.
While canvassing domestic and international inclusion in trade and export will help improve their income, empowering them with the right skills as well as market access will not only improve productivity, but will enhance Nigeria's competitiveness in the global market. Sarah Chimugu, Channels Television News.
All right, let's discuss the latest in the global oil market and other matters now. Joining me for the conversation, we have Halima Didiron. She's a senior analyst, financial derivatives company. Good to have you, Halima. Good morning.
Good morning, Ladi. Thanks for having me.
Fantastic. So, definitely we're seeing volatility still in the oil market. And this is after the IEA confirmation that they'll be releasing 400 million barrels of oil into the markets to calm things down, even with the disruptions, supply disruptions. But prices, they did fall on the announcement, but they're back up again. What's playing out?
Okay, so when it comes to geopolitics, crude oil happens to be one of the most sensitive. And this is because it is central to global power, economic stability, and even national security. So when we have issues like tension, supply disruptions, we see that the oil price move within hours. And that's exactly what we are seeing now. So in the beginning of the trading week, we saw that the tension between US, Australia, and Iran escalated. And so we had a spike in oil price to about $120 per barrel. But because first the US government mentioned that the tension will come soon, and also the International Energy Agency, which consists of majorly oil consuming developing country and net oil import countries, said assured that there will be like a buffer 400 million barrel of oil, which happens to be, I think, the highest in history when it comes to such. So how it happens is that this agency has a requirement to hold at least 90 days net imports of oil, so that it acts as a buffer when there is emergency shortfall in the oil market. And so this information made the oil price trade downwards. So about, I think, 95 barrel per dollar per barrel. And so, but into the week, we saw that Iran is saying the tension is not likely to ease soon. And so this information brings about fear and tension. And we saw another spike. So a reversal of the downward trend. And so in all of this, why is this happening? This is happening because Iran happens to be a significant region and country when it comes to oil supply and even export routes, because he has about 1/5 of the oil export routes in the global market. And so this has implication, both the negative and the positive. But before we go to the positive, let's quickly look at the negative implication. One is that the nations of the world might not be able to achieve their inflation targets and economic targets. We might see a spike in inflation, and we might also see a slow in economic performance. Not only that, central banks of the world or of the nations might not be able to tilt towards expansionary fiscal and monetary policy. They might want to stay hawkish and just look at how things are going. And also, we might see that oil exporting countries might gain, like Nigeria, but unfortunately, this is coinciding with when our oil production is at a decline. So we might not really have a full advantage in this regards. But so if we move to the positive side, we can see that maybe renewable energy companies might gain in terms of improved policy to help them and attract investments, because it seems to be the next substitute to fossil fuel. So we might see those companies and people investing in such gaining. And also investors in energy commodities too might have some dollars in their pockets. So in all of this, this is telling us that when the tension will ease or de-escalate significantly, we don't know, but the volatility will continue to eat deep into domestic markets, pricing, and even economic performance. So that is the situation for now.
Yeah, and I see, this volatility, dribbling some investors. Right now you hear this news, you expect this to happen, but something else, happens with the price. Some of the headlines also we see coming on your page there. It says Nigeria is halting gasoline import permits. I guess that's a boost for the Dangote refinery. Talk to us about that.
Okay, so the Department of Petroleum Resources, that's the DPR, under the PAI, that is the Petroleum Industry Act, is trying to halt petroleum product import for now. And that is because the main purpose of this act is to act as give local and international companies that wishes to import refined petroleum products into the country in order to serve as a buffer whenever there is a shortfall in petroleum products. And so why the government is suspending such a license or permits now is because for now we have enough when it comes to local supply of petroleum products from the Dangote refinery. At least it is given about over 90% of what the national need is. And so that is why that is being altered for now. And so we will see that one, it will help our capital retain it. It will retain the capital because there won't be much forex outflow, because definitely imports needs forex in order to be done. And not only that, it will help to encourage investors in local refinery, and it will also sustain and give us assurance when it comes to local supply of petroleum products, which is a good one for the country. So I think that is why the government is taking that step, because the permit itself is majorly for events of shortfall. But some analysts and some people are saying that this could mean that there will be less competitiveness when it comes to local refinery, and also it could lead to maybe a lack of supply when there's issue in that refinery. But for now, we are seeing that everything is going on well, and it is assuring us of enough supply of petroleum products, and it also have a positive effect on our forex and naira stability. So it's a good one. I think it's a good move.
All right. So I'd like you to check your crystal ball. Definitely, this was also a very volatile week for oil.
Mm-hmm.
What are you seeing going into next week?
So for now, it's in two ways. For the assured supply from the IEA, it will make the tension or the supply shortfall marginal. What do I mean by that? Because we have at least a aspect of the supply that is significant and is assured that we'll have in the global market. But on the other hand, the cause of the tension is not going to de-escalate soon with the situation on ground. So we'll still have a spike, but because of the short supply, it will not be as significant as expected. So that is what will happen. There will still be volatility, but this short supply will calm things, at least if not significantly, marginally.
Right,
so that's the situation.
And I'll definitely be we'll definitely be watching out for how much the IEA will send out per day, from that 400 million barrels. All right, thank you so much, Halima Adediranche, Senior Analyst at Financial Derivatives Company. Thank you for coming on today.
Thank you for having me.
All right, let's get a check on the global economy now. We have Will Ebong to give us the details. And, Will, I was thinking, while having these conversations, I remember in 2025, I was asking myself, what could be that catalyst to take oil up? Seeing how 2025, went, because oil was range bound.
Yes.
Most of the, I think it was even a negative performance, for oil. Q1, $75 per barrel. Q2, $67. Q3, $68, Q4 of 2025. I was wondering what that catalyst could be, but it seems it just takes a war.
It's just,
to take oil up.
Unfortunately, appears to be a war that can take oil prices higher, above, benchmarks that governments, especially in sub-Saharan Africa, those oil-producing countries are hoping for to be able to fund their budgets. Nigeria, especially.
Yeah, but we suffer it at the pumps.
Yes, because
sadly.
Inflation, definitely will come and suck that out, and that's what inflation means, higher interest rates, and that means higher borrowing costs. So let's see how that goes for Nigeria, especially now that we should be benefiting and possibly diversifying to be able to ensure that our economy is stronger at this point to be able to fight back, external shocks.
Yeah.
Well, let's see. Global oil prices, Ladies mentioned it earlier, surged even after International Energy Agency, IEA, approved the release of 400 million barrels of oil, the largest release in history, as markets remain concerned about supply disruptions from the Middle East conflict. And traders are increasingly skeptical that the 400 million barrels from the strategic reserve will be enough to offset global supply risk linked to tensions around the Strait of Hormuz, a key route for global oil shipments. Now, analysts say the reserve release may only provide short-term relief as continued threats to shipping and production in the region keep energy markets volatile and push crude prices higher. And the European national gas prices climbed sharply following the surge in global oil markets as the Middle East conflict disrupts shipping routes and raises concerns over energy supplies. Bench gas futures rose as traders reacted to growing risks to shipments through the key routes such as the Strait of Hormuz, a critical passage for global energy exports. Now, disruptions in the region have already pushed oil prices higher, lifting gas markets across Europe. Analysts say the worsening shipping crisis could keep energy prices elevated as Europe remains heavily reliant on imported liquefied natural gas to meet demand. And next up, global bonds market, we see that wiped out their gains for 2026 as rising oil prices linked to the Middle East conflict fuel fresh concerns about inflation. Investors are selling government bonds worldwide, pushing bond yields higher amid fears that central banks may delay interest rate cuts if energy prices continue to rise. Now, analysts say the surge in oil prices and ongoing geopolitical tensions are raising the risk of persistent inflation, leaving financial markets increasingly volatile and forcing investors to reassess the global interest rate outlook. I think, Glady, we have something to announce to our audience. Yeah, just a quick one. We're joining live coverage right now of a pull-out parade ceremony of IGP Kaude, and we'll be joining that coverage on DSTV, but you can follow the money on other platforms. Back to you. Thank you so much, Ladi. Now we see U.S. President Donald Trump says he does not believe Iran has laid naval mines in the Strait of Hormuz, despite reports suggesting the key oil shipping routes may be threatened. Speaking amid the escalating conflict, Trump said the United States has already destroyed several Iranian mine-laying vessels and warned Tehran to remove any mines immediately if they exist. The U.S. president also indicated that additional strikes on Iranian targets remain possible as Washington seeks to keep the strategic waterway open for global oil shipments. Now, the administration of Donald Trump has launched new trade investigations that could lead to fresh tariffs on imports from several countries. The probes will examine trade practices by partners including China, India, Brazil, and Vietnam, with U.S. officials assessing whether their policies disadvantage American companies. Authorities say the investigations are being conducted under the International Emergency Economic Powers Act and could result in new tariffs or other trade measures if violations are confirmed. Now, still staying on trade and tariffs, South Korea's parliament has approved a special bill enabling up to $350 billion in investments in the United States as part of a broader trade agreement with the administration of Donald Trump. Now, an investment plan includes about $200 billion for strategic industries such as semiconductors, artificial intelligence, energy, and critical minerals, along with $150 billion for shipbuilding cooperation between the two countries. Officials say the move aims to strengthen supply chains and ease trade tensions after Washington threatened tariffs of up to 25% on South Korean goods if the investment commitments were delayed. Now we'll see up next, Morgan Stanley has restricted investor withdrawals from one of its private credit funds after a surge in redemption requests from clients. The bank says investors sought to withdraw nearly 11% of shares in its North Haven private income fund, but the firm only fulfilled about 45.8% of those requests, in line with the fund's rule that caps redemptions at 5% of outstanding shares per quarter. The move comes amid rising pressure in the $2 trillion private credit market, where investors are becoming more cautious about loan portfolios and economic risk, prompting several asset managers to tighten liquidity controls on similar funds. Now we see Japan's Honda Motors Co. has warned it may take a charge of up to $15.7 billion as it reassesses its electric vehicle strategy amid slowing global demand for EVs. Now, the automaker said the charge, equivalent to about 2.5 trillion yen, reflects rising costs and weaker demand in key markets. Honda is also cancelling the development and launch of 3 electric models planned for North America as it adjusts its strategy. The company now expects a fiscal year loss of between 270 billion yen and 570 billion yen, reversing earlier profit forecasts as global car makers rethink EV investments and shift focus toward hybrid vehicles. And that's the global news updates. I'm Will Iban.
All right, Will, thanks for the update there. And, you know, markets are buzzing again today for the Thursday trade. We see the NGX right now, that's open. Pre-trade there, up about 0.35%. Positive territory received. There's more cherry picking. In Europe, markets are down. Asia closed in the red after trying to make a comeback. U.S. futures pointing down. Gold, that's up for the safe haven trade right now. Then we see crypto, a big pullback there. We'll give you more updates at 1:30 on Business Incorporated. Thank you for watching Business Morning. I'm Ladi Williams. Bye for now.